Alright guys, welcome back to my channel. This is Freddy FX speaking tonight, and I would like to welcome you to this new channel. Alright, I just created this channel some few days ago, and today our major discussion will be why we lose money to the derivative synthetic indices. Alright, speaking about derivative synthetic indices, I mean your popular boom and crash, volatility indices, the step index, the jump index, and so on and so forth. All right, I'll tell you the reason why you lose your money to the volatility indices or the boom and crash whatsoever synthetic indices, and I'll give you subsequent remedy to that. So before we go into the video, I would like us to take a little time to smash that subscription button, all right, to help support my channel. Like I said, it's a new channel, okay? So just I would like your help, support. Click on the like button and turn off that notification bell after your subscription to get more videos from me as soon as I drop them. All right, so without wasting much of your time, let's go right straight into the video. Okay, like I said, we'll be discussing four major reasons why we lose our money to the synthetic indices. All right, so reason number one, which is a very important reason, and everybody should try to avoid this, is going into the market without mentorship. So reason number one is mentorship. All right, so now the reason why most of the traders go into the derivative broker, let's say not the derivative broker but the forex market in general, all right, most traders go into the forex market because they want to avoid the cost of paying for a mentorship class or stuff like that. Okay, for example, maybe you just saw this trading stuff online and then you want to check up on it. The first thing that will come into your mind is YouTube, all right, because you might want to search on the internet or your browser, whatever, but your research will take you straight back to YouTube, and then you will come to YouTube. Yeah, there are so many videos around YouTube explaining several trading courses, several trading strategy. All right, so you might find yourself in that kind of situation where you be following a particular YouTuber or a particular YouTube course about a particular trading without having a physical mentor or somebody that can direct you in a path whenever you're lost. Okay, you just come to YouTube and then find one particular video or some videos, and then you start watching those videos continuously, thinking that all right, so after watching this video you can practice them and then make money for yourself. Well, sometimes it does favor you and sometimes it do go against you, and then when it does go against you, you start complaining and then start blaming derivative and start saying derivative is scammer. I've heard somebody say one time that derivative broker, they are scammers, they scam you of your money or stuff like that. That's because you jump into the market or you jump into trading without proper mentorship. Right, so if you come to YouTube and then pick a particular a particular trader or a particular YouTuber and then start following his YouTube videos without actually asking him what are these things or how did they come about, you might find yourself in a very tight spot where you go out, get some money, come back, put into your trading account, and then before some time you blow the account, you go back again, look for some money, and then come back and put into your account. You still blow up the account because you don't have somebody that teaches you or somebody that directs you in the path that you're supposed to go. All right, that is reason number one. So reason number two is indicators. Reason number two is indicators. All right, now don't get me wrong, I did not say indicators are really bad. I didn't say indicators are bad, like completely bad, but the wrong interpretation of indicators are really very dangerous. I've seen many traders that come to YouTube because YouTube is the place they got their information from. And then if you check around YouTube, you see that, especially for the boom and crash, and short for the synthetic indices as a whole, if you go to YouTube, you'll find various videos that explain to you about how to, put your RSI. Okay, let me just give you a typical example here on my screen. So I'll have to delete this rectangle, have to delete this. Some YouTubers will tell you to come and then put your RSI, look for uh, your RSI, relative strength index, put it and set it to period this and set it to apply to close, pixel 4 pixel blue, color blue, blah blah blah, levels 90 50 10, and then enter. Then they will come and tell you also to add your, on the indicator window, one, to add your moving average and set it to period, let's say period 12, then shift 0, this method, this, then color red, and then you enter. And then they will tell you if your RSI is above the oversold level, overbought level, which is the 90 level, and then your relative strength index is above the 90 level, and they cross each other here, you should take a sell. And then if they are below, if they are at the overbought level, you take a sell. If they are at the oversold level, you take a buy. Then you just go into your trading account and then start up with some um little amount of money, because most times when they are doing this example, they'll tell you can catch various spike, or you can get 3 4 candlesticks, 5 candlesticks when you're a scalper, and then you leave the market. Then you believe that and then fund your account with a particular amount of money. Before you know it, your account is blown. Before you know it, your account is blown. Now, don't get me wrong, these indicators are not really bad, they are not really bad, but the wrong interpretation of these indicators are very, very dangerous. They can make you blow an account over and over and over again. In the sense that if you're using an indicator that you don't have a very good knowledge about, you don't have proper understanding about, you're definitely going to blow your account severally, and then you start blaming the dairy broker about this whole stuff. Now, I do not say, let me repeat again, I do not say indicators are really bad. All right, you can use indicators and make a good entry in the market and hold your entry for a particular period of time. But now, when to enter the market using your indicator is what you should prioritize yourself to learning. Right now, if I will give you an advice, I will say you should learn proper price action first before using making use of any indicator at all on your chart. All right, before you even decide to use an indicator, you first have to learn proper price action, because these indicators, they are just like a debt in your chart. All right, basically you don't use them, you don't even need them, because me personally, I don't use indicators. They easily deceive. Indicator might be telling you, one indicator will be telling you one thing, and the indicator will be telling you absolutely different stuff. All right, so basically you don't need them. You don't need indicators if you want to succeed in trading. What you really need is proper price action. Right, if you stick to this channel, my next video I'll be dropping will be to explaining some basics about price actions. All right, so you might want to do yourself a favor to smash that subscription button and then wait for the next video where I'll be explaining proper price action in full. All right, so now that is reason number 2, I mean indicators. So I'll have to delete this indicator here. This is rubbish, I don't use them. All right, so the next reason why you lose your money to derivative broker is the lack or the inability to apply proper risk management on your trading account. All right, most people just come around, pick up some certain amount of trading account. Let me say a $20 account, because that's what most YouTubers want you to understand. They want you to understand, or want you to believe, that you can just come into the market with $20 and then you'll be making like $50 to $100 every day, because they will be telling you how they turn $20 to $1,000, how they turn $50 to 1 million naira in a space of 4 days. Some of them will tell you in a space of 7 days. Some of them will tell you in a space of 1 week. Then all these things, I'm not saying they are lies, all right. But if you go about your trading as a beginner, you go about your trading in that kind of mindset, you're going to be losing money over and over and over again. In short, every successful trader does not rush into the market with $20. I'm not saying you cannot succeed with $20. I'm not saying that, but if you want to be a consistent, a profitable forex trader, all right, you will not need to go and rush and fund your account with maybe that $20 amount or stuff like that, and be expecting to be getting $50 every day, except you're using a kind of a witchcraft, which doesn't really work in the forex market. Okay, this is merely numbers. So except you're using something else that I don't know yet, that is when that will be possible. Because of course, most times, you might lose your money to the broker. Yeah, no trader is 100% perfect, right? No trader in this life is 100% perfect. There are times where you lose some little money, and there are times where you make some huge money, right? So depending on how much you're making when you're winning and how much you're losing when you're losing, I know this will not make proper sense to you until when we go over to the next class, maybe on our subsequent videos, and then I'll explain to you and break down to you proper price action. All right. So now, the lack of proper price action could land you in a very dangerous position where you keep blowing your account over and over again, and in a very short period of time. I've seen people that fund account with $100, and then the same day the $100 would disappear, and they'll be like, they'll be so frustrated, and so on and so forth. That is because they fail to apply proper risk management. Now, if you want to succeed in trading, risk management should be your priority. You should learn how to risk and know how much you're risking on your account, and know how much you have. Then that's when you know how much you're risking. And then that's if you risk a particular amount that you've accepted in your spirit, that if I should lose this amount, I'm okay. Then inside of you'll be very, very ready to accept a particular trade, and then you know how to enter a particular trade, and then know what to risk at a particular point in time from day to day. Right. So knowing proper risk management is also a key to be a successful trader over time. All right. So the next and last reason why we lose our money to derivative broker we'll be discussing tonight is patience. All right. Now, patience is an attitude you should possess in trading. Right. Let's say you want to trade a particular index. Let's say the boom 1000, for example. Right now, please pay a very good attention to this. All right. Pay very good attention to this, because not every YouTuber will tell you this. All right. This is one of the secrets that most people will not reveal to you. Okay. But let me just say it out now. I use my 1 hour time frame. Sometimes I use my 4 hours time frame to know and identify trends. All right. Now, you might not understand this if you don't know proper price action strategy. Right. So now, if I want to analyze my trade, you saw when I insert a box here. This is rectangle box. All right. I insert something like this up here, and then I brought one down to this point here, down to this point. Now, this these are key levels that I've personally taken for myself, right? Because this market is currently consolidating around this place, yeah, around this place. This market is currently consolidating around this place, right? So I I drew these two key levels here, s- stating, or I'm expecting the market to reverse whenever it reaches or hits this box point here now. But when it crosses this point and then closes above it, then the next candle should be my area of concentration. If I want to, maybe buy the market at this level, if I want to buy, then after I have the market close around this point here, around above this my level I've taken. If the market closes above the level I've taken, now I watch to see what happens to the next candle that happen that is going to close after my market close around this point. Now if this candle is coming all the way down this point, then I'm certain that yeah, this market is not buying. So buying option is totally out of my mind at that moment. That is the key to be patient. Now let me say the market is around this area here, and then you see it's near this box, and then you say okay, because the thing have not touched this box and it's coming down all the way here, that is going to sell. If you're not patient enough to wait it to reach at least your key level before you make that decision, then the market might just as well take you out at any time, and then you might end up losing your phone to the broker. Then that is why I say patience is one of the main reasons, one of the core reasons why people lose their money. In short, most of the people, in short, 90% of the traders that lose money to any broker at all is because they don't have enough patience and discipline. All right, so with that being said, I hope you picked some few reasons from this video. I'll see you on my next video, but before that, I would love you to kindly click the subscription button. All right, subscribe to this channel, click on the notification bell to get notified when I drop a new video, and then smash that like button so that you can refer the video to more people that are in similar problems. All right, so you too can